Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me remotely, we have Tal Cohen. He's the executive vice president and head of North American markets for Nasdaq, with an update with markets today. Tal, it's great to have you with us as always. Thanks for making the time to join us on Trade Talks. And it really has been an unprecedented market. What's happening in the markets today and why?
Well, the last few weeks and perhaps the last month indeed have been unprecedented. And just to give you a sense, it's the first time since 1930 we've seen a 9% down day followed by a 9% update. So you are seeing massive swings on a daily basis. And we're going from red to green and once again back to green today after yesterday's big sell-off. So is a sell-off for real? It is. It does reflect a new reality. People are still, and investors are still digesting the combination of escalating fears over the virus, the plummeting oil prices that we've seen over the past week, and subsequent to that, significant movements in interest rates. So this has just created a high level of uncertainty, and our focus has been trying to maintain investor confidence throughout this downturn.
So, Tal, some have called for financial markets to temporarily close. Should markets be shut down or have trading hours shortened to help weather the volatility?
Let me start by noting that the markets are well functioning. Exchanges, clearinghouses, and brokers have successfully managed elevated volumes and elevated volatility. So shutting down the market, in our opinion, would lead to greater volatility, add to the fragility of the market, and hurt investor confidence. And as an example, we saw the Philippines market close their market down for 2 days. When they reopened, that market was down almost 25%. So keeping markets open must be thought of as part of the solution.
Okay, and the next obvious question is, are we able to sustain this volatility? Are markets resilient enough to manage through this time of uncertainty?
Nasdaq's markets were designed, built, and tested to weather these types of market conditions. So, of course, we will monitor the situation. We're going to work closely with regulators, ensure that our systems are performing well, and we'll be talking to clients about what to expect in our markets. But as an operator of an exchange, we want to be part of that solution. And so, once again, we're strongly advocating for these markets to remain open based on what we've seen and how we performed to date. And we want investors to know that we have well-functioning markets that will support them during these difficult times.
And to wrap up here, what is Nasdaq's plan if this kind of volatility continues longer term?
So I think there's two things to separate. The direction of the market continues to be a concern for us and investors, and then there's the functioning of the market. And we will, once again, monitor to make sure that the functioning of the market is high. And what investors and the public should know is the industry has spent the better part of the last 5 years implementing the lessons learned from the flash crash and the August 2015 event with ETFs, and before that, the bubble. And so we've incorporated a lot of the lessons learned into our markets today, and that's why the market-wide circuit breakers have been working as expected. The single stock circuit breakers have been working as expected, and the industry has been much more harmonized in the way that it reacts to this volatility and elevated levels. So I think we're in a good position to continue these markets and operate these markets, and it's just a matter of when these markets will turn around.
Okay, Tal, appreciate the updates. Thanks so much for joining us on Trade Talks.
Thank you, Jill.
All right, that's Tal Cohen. He's Executive Vice President and Head of North American Markets for Nasdaq. And I'm Jill Malandrino, Global Markets Reporter at Nasdaq.